He has been called the most powerful man on Wall Street, a consigliere to presidents and prime ministers, and the man at the hub of the wheel of American capitalism. But who really is Larry Fink, the balding, bespectacled 70-year-old titan in charge of BlackRock, the world's largest asset manager? With assets under management, or AUM, valued at between $9 and $10 trillion, depending on who you ask, BlackRock is a beast, and Larry holds its reins. Now let's quickly put BlackRock's assets into some context. According to the Financial Times, they are, quote, roughly equivalent to the entire global hedge fund, private equity, and venture capital industries combined. In fact, if BlackRock were a country, it would have the third largest economy in the world, behind only the US and China. Its assets are almost double Japan's entire gross domestic product. Yep, BlackRock is big, unnervingly big. And yet its head honcho isn't well known outside of financial circles. So, this video will explore who the so-called King of Wall Street is, his rise to prominence, how he antagonized the political right and left, and why he's just become one of the most important people in crypto. But first, a disclaimer. As Guy, your crypto guide, I'm here to amuse, but please don't confuse my words for financial cues. I offer knowledge, insights, and crypto updates galore, but remember, it's not advice to invest and explore. Crypto's a wild ride with risks you must assess, so research, be informed, and make those decisions with finesse. And now, back to our scheduled programming. One of the defining moments of Larry Fink's life occurred in the second quarter of 1986. By then, he was already riding high, having become the youngest member of the management committee at investment bank First Boston, and had developed an oversized ego as a result. He was also a, quote, jerk, as he later said about those years. Well, jerk or no jerk, Larry was a golden boy, on track to be CEO. He could do no wrong, until he did, quite spectacularly. Like Icarus, disregarding warnings not to fly too close to the sun, Larry threw caution to the wind in pursuit of glory. He didn't fully grasp the risks of his investments, and his desk lost around $100 million, a hefty sum even today, but positively terrifying back in the 1980s. He was cast out, set aside, and within 2 years had left the firm. Now, in a brilliant Vanity Fair article from 2010, which I urge you to read if you want all the ins and outs, the event was described by contemporaries as, quote, one of the most spectacular and humiliating flameouts on record, public and really awful. Even 22 years later, when speaking to the magazine, Larry was, quote, visibly upset remembering the time, gripping his chair so tightly his knuckles are white. That humiliating event would leave a deep scar on Larry's psyche. Never again would he overextend himself. Never again would he recklessly take on so much risk. Now, a failure of such magnitude can either be the breaking or the making of a person, and for Larry, it was the latter. By then working for private equity shop Blackstone, Larry and a coterie of loyalists secured a $5 million line of credit and set up Blackstone Financial Management, BFM, part owned by Blackstone and operating out of its New York offices. Larry's star was in the ascendant, and by 1993, BFM was managing more than $20 billion. A somewhat amicable divorce from Blackstone that year saw Larry establish a new firm, which, as a homage, he called BlackRock. I see what you did there, Larry. Very clever. Under Larry's guidance, BlackRock transformed from a bond investment house into the world's biggest money manager. Newspaper profiles of Larry describe him as resolutely in control of and single-mindedly obsessed with BlackRock's success. With the scars from the $100 million First Boston disaster still raw, Larry invested in technology to help manage risk. With its genesis in BFM, his firm's commitment to innovation and its determination to manage risk led to the creation of the Asset, Liability, Debt and Derivative Investment Network, or Aladdin. Now, Aladdin is undoubtedly BlackRock's crown jewel. From a simple dashboard that can be expanded and collapsed at ease, the software can scrutinize risk across thousands of complex holdings. In Vanity Fair's words, quote, "It is through Aladdin that BlackRock effectively has an electronic eye on investments that amount to about $9 trillion worldwide." In fact, Aladdin is so effective that around 200 institutions, many of them BlackRock's competitors, use it under license. But back to the man who started it all. Now, the Larry we see today, usually on rare appearances on CNBC, is a far cry from the long-haired, turquoise bracelet-wearing upstart who graduated from UCLA with a degree in political science and an MBA, and who promptly headed to Wall Street in 1976. His private persona is also a lot different to that which appears on TV, according to that same 2010 Vanity Fair article. In public appearances, he appears soft-spoken, using a tone that is, quote, authoritative and bland. Yet by his contemporaries, he's described as a master networker who is, quote, very intense, blunt, psychologically astute, and with an edgy wit. It's these traits, as well as his business acumen, that have allowed him to thrive in the scrappy, hard-scrabble world of Wall Street. And his networking prowess has served him well not only on Wall Street, but in the halls of power of Washington, D.C. as well. And it's a relationship that he relishes. "As I told Washington" is a phrase he's been known to trot out. For BlackRock, meanwhile, it was the financial crisis of 2008 that propelled it to empire status, with Larry, of course, as supreme commander. As other Wall Street juggernauts collapsed or teetered on the brink of bankruptcy, BlackRock was called in to clean up the mess. And, controversially, BlackRock was awarded key contracts with no competitive bidding. Some have argued that this was chiefly because BlackRock's great size and vast pool of expertise made it uniquely positioned for the laborious but highly lucrative job. Many have complained about what they saw as preferential treatment, pointing to Larry's close ties to senior government officials, including former Treasury Secretary Henry Paulson and his successor, Timothy Geithner. One senior bank executive in that Vanity Fair piece described BlackRock as, quote, almost a shadow government. But if Larry and BlackRock were close to power back then, they've only consolidated that relationship in the ensuing years. Despite heavy criticism, a revolving door between BlackRock and Democratic administrations has seen notable high-profile figures moving between the two. BlackRock alumni have pitched up at the Treasury Department, the National Economic Committee, and in top advisory roles. In the other direction, officials from the Obama and Biden administrations have since graduated to lucrative roles at BlackRock. These ties, and the potential conflicts of interest they imply, are strongest with the Democrats, the party Larry proudly supports, but they exist with the Republican Party too. Got to manage risk, after all. In 2017, while in office, Donald Trump said that, quote, Larry did a great job for me. He managed a lot of my money, and I have to tell you, he got me great returns. Well, I'm sure Larry and BlackRock didn't do too badly out of it either. Let's now take a second to acknowledge BlackRock's influence. Beyond the vast trove of assets under management, BlackRock is, quote, one of the biggest shareholders in virtually every major company in America, and quite a few internationally as well, as the Financial Times puts it. In a 2019 paper titled The Spectre of the Giant Three, academics from Harvard and Boston found that combined, the three largest index fund managers, BlackRock, Vanguard, and State Street, had increased their average ownership stakes in the 500 biggest listed US companies from around 5% in 1998 to over 20% by 2019. And that trend was continuing. They estimated that, quote, the Big Three could well cast as much as 40% of the votes in S&P 500 companies within 2 decades. Now, set aside your opinions of these companies or the people who comprise them, and stay alert to conspiracy theories that take this point too far. The very fact of power and influence coalescing around so few, and those few getting ever more powerful, though, should be alarming. Particularly when those empowered are unelected, yet so close to those in government. And speaking of those in power, Larry is long believed to have had aspirations for the top job at the US Treasury. Those dreams seemed to die in 2016, however, when Hillary Clinton lost the US election to Donald Trump. Perhaps Donald wanted Larry to keep managing money for him and not the whole country. But while Larry's formal political ambitions seem to have been cast aside, his pursuit of informal political influence seemed to crystallize in January 2020, when he penned his 8th annual letter to CEOs. In it, Larry expressed his vision boldly, quote, "BlackRock does not see itself as a passive observer in the low-carbon transition. We believe we have a significant responsibility as a provider of index funds, as a fiduciary, and as a member of society to play a constructive role in the transition." The following year, he took it a step further, citing an expectation for companies to disclose plans for how their business models will be compatible with a net zero economy by 2050. All summed up in 3 letters, ESG. Environmental, social and governance, an investment ideology we've spoken about ad nauseam on the channel in the past. Now, it's largely because of his ESG stance that Larry, used to operating in the shadows and not particularly well known outside of financial circles, has been in the headlines in recent years. He has consistently maintained that his emphasis on ESG is in the best interests of his shareholders, stating that climate change is a reality that will impact bottom lines in the future if businesses don't respond appropriately. Yet Larry's ESG obsession has come under fire from many quarters, and he seems to have been utterly unprepared for the backlash he has faced as a result. On the right, accusations of woke capitalism and damage to the oil and gas industry have been leveled against him. Opposition from Republicans in Texas and Florida has resulted in billions of dollars of assets withdrawn from BlackRock's fund. Attacks have been loudest from the right, yet many on the left are dissatisfied too. Critics label him as hypocritical, arguing that BlackRock has not gone far enough in divesting from oil and gas firms, is associating with weapons manufacturers, and profiting from deforestation. The left-leaning Guardian newspaper went so far as to label Larry a, quote, climate villain. And even BlackRock's former sustainability chief, Tariq Fancy, has criticised the ESG trend, deeming it, quote, marketing gobbledygook that distracts from the real climate crisis. Because of this mounting opposition, Larry has been backtracking this year. His 2023 letter to CEOs dropped the term ESG, which he claims has been, quote, weaponized by the far left and far right, and he has stressed that minority shareholders do not have the authority to dictate company actions. Yet he affirms his commitment to, quote, conscientious capitalism, which to many, including some of his supporters, is simply ESG by another name. Caught between environmental activists urging him to harness BlackRock's influence for greater climate action, critics from the ideological right and left, a fiduciary responsibility to his shareholders, and his own ESG position, Larry is in a somewhat unenviable spot. As ESG, conscientious capitalism, the climate crisis, and the quest for decarbonisation become ever more a part of the discourse, Larry isn't likely to fade from view anytime soon. Anyway, now that we've covered those, well, relatively insignificant topics of wealth, power, and the climate, it's time for the big one. When it comes to crypto, Larry has pulled off quite the 180. In 2017, the, quote, $10 trillion man called Bitcoin, quote, an index of money laundering. Now, to be fair, he also said that he believed in its potential, but that it was, at the time, quote, much more of a speculative platform. He subsequently said that he saw no interest in crypto from his clients. But things change, and boy, can they change quickly when it comes to crypto. BlackRock made a few inroads into the crypto space in the years following Larry's money laundering slur, and he was forced to acknowledge a growing interest in it among his clients. BlackRock went on to announce a private trust to allow Bitcoin exposure for US institutional clients, partnered with Coinbase for client connectivity, and pledged a $400 million funding for Circle's USDC stablecoin. Fast forward to June 2023, where amid an SEC crackdown on both Binance and Coinbase, BlackRock came well and truly out of left field and applied for a spot Bitcoin ETF, officially called the iShares Bitcoin Trust. Now, around 30 comparable filings from other companies have been rejected by the SEC. This, though, is the first time that BlackRock has applied. And based on its size and extraordinary record, the company has secured 575 approvals versus 1 rejection. There is optimism that the SEC might actually approve a spot Bitcoin ETF this time around. If it does, then this will be a big deal for Bitcoin, as I've outlined in more detail in another video, link below. Now, if you've watched that video, you'll know that a spot Bitcoin ETF involves the direct acquisition of BTC in the spot market to back the ETF shares. If BlackRock obtains approval for its spot ETF, it will need to start accumulating BTC. In theory, this should push the price up, though it's worth noting that BlackRock is likely to accumulate its BTC over the counter, in direct trades behind the scenes with an exchange. That is, it's unlikely to go out and buy it publicly on an exchange like us plebs would. Over-the-counter trades are favoured by large investors and institutions because they are less likely to move the market. So, although BTC will likely pump if BlackRock's application is approved, it may not be as huge a pump as many would have you believe. That said, we've since witnessed a flurry of interest in crypto assets from traditional investors. 3 other asset management companies have since followed BlackRock and filed or refiled for spot Bitcoin ETFs. Meanwhile, Fidelity, Citadel, Charles Schwab, Sequoia, Virtue Financial, and Paradigm have backed EDX, a recently launched crypto exchange aimed at institutions, and Nasdaq also announced it's looking to launch its own crypto custody platform. So, make no mistake, this surge of interest in crypto from TradFi and the resulting boost to the price of Bitcoin stem from BlackRock's decision to file for an ETF. And big decisions like this from BlackRock have to come from the top. Thanks, Larry. And thank you, folks, for watching. We'll have to wait and see if BlackRock's application is approved and how it affects the markets. In the meantime, we'll be sure to keep you up to speed. And if you enjoyed this video, be sure to smash the like button. If you're thinking to yourself, I want more where that came from, then my friends, you are in luck. Subscribe to the channel and ping that notification bell to get exactly that. You can also follow me on the usual socials and get exclusive insights about the crypto market on the daily by joining my Telegram channel. Curious about my personal crypto portfolio? Well then, subscribe to my newsletter where my team and I will also regale you with added crypto insights. And if you're a bargain hunter, check out the Coin Bureau deals page where you can get the best discounts on top crypto wallets and enjoy up to $40,000 in bonus airdrops at leading crypto exchanges. I'll see you all next time.